clear this up for me. With dollar yen, if we get a further sell-off in the equity market, does that mean that the yen strengthens because of the safe haven bid, or does a bit of dollar strength come through because the market is pricing in faster US inflation, faster Fed hikes?
Well, I think we've seen that. We've seen, if you look at your long-term chart, when you put that big dollar yen chart on the screen, you saw dollar yen soar higher on the Abenomics, then you saw it again rally on the Trumpflation trade. So you've actually seen market expectations over the past year reassess how far that Trumpflation trade can go and how stretched the dollar was on sort of relative value basis. So we have to always take into account the long-run picture for our trades, our big macro themes, and dollar yen was already looking very stretched at those levels. So we've actually been short dollar yen all this time since last January, so over a year now, we've been pushing the weaker dollar theme. In terms of the yen, what we're going to see is towards the end of this year, it might not happen at the end of this year, but we'll be talking about it in the market, is we're already seeing the Bank of Japan conducting stealth tapering. So after it changed its policy and started fixing the 10-year JGB, it didn't have to buy as much in terms of its QE program. And you've seen a lot of slowing in that program. So when we get to the end of the year, we'll see further reductions in the Bank of Japan purchases. So the weakness from the monetary policy has been taken out. And then you've got what's going on in the market. We've had a near bear market correction in equities. It was 11% high to trough at the worst moment. It's coming back a bit. And if you start to adding the risk correlation to it, it's dollar yen lower.
All right. So in that sense, then, what's more important to you, what the Fed does or what the BOJ does for the direction of dollar yen next?
Well, the market is pretty much talking about 3 or 4 hikes from the Fed this year. Only if we start talking about 5 or 6, then does dollar yen get another boost. So I think if we extrapolate that, we've had a big sell-off in yields already, but you saw a complete disconnect.
So Fed already priced in a way?
Pretty much, in terms of the short-run stuff. All we can talk about now is term premium. And if you talk about term premium, that's actually not very good for risk. So we have these 3 cherries that drop the risk market. One of them is you start to see faster central bank hiking pricing going into the curve, and risk market comes off. And that will be more impactful. That's dollar yen lower. And like I said, at the end of the year, it's going to be more about the Bank of Japan than the Fed.